Hi guys. GM folks, welcome to the live stream. I'm not seeing anyone joining yet, so I'll just hang around and wait for you guys to join me on today's live stream. Greetings, folks. I don't know. I'm not sure anyone can hear me. Okay, welcome to the live stream, folks. Um, I don't know if you all can see my screen now. So, the basics of technical analysis. The basics of technical. Okay, I believe everyone can literally hear me, right? Okay, thanks. So, in today's live stream, we're going to be talking about the basics of technical analysis. The reason why I had to go through this particular course again is because a lot of people, the reason why I had to go through this course again is because a lot of people have not been joining the live stream lately, and I thought it was very important to bring back this topic on the basics of technical analysis. Yes. See, technical analysis, like I always say, is a very unique skill in the financial markets. It's a skill that when you have learnt it, when you have mastered it, when you can stay disciplined while utilizing that skill in the financial market, you're gonna make a lot of money for yourself. It's not only limited to crypto. You can use it in the forex market. You can use it in the futures market. You can use it in spot trading and a whole lot of markets. So you don't just start from nowhere. As a beginner or as a developing trader, it's important for you to always look at the basics of technical analysis. I hope you all can still hear me. I just want to be sure while I proceed. Can you all still hear me? I wanted to know if I'm still audible, if you all can still hear me. Okay. Thank you so much, sir. Thank you so much, sir. About the basics of technical analysis. So when we talk about the basics of technical analysis, what does it actually mean? You see, technical analysis, like I always say, is a study of price action and trading volume using historical data, mainly the charts, the pattern, the indicators, and all of that. Okay. You use it to speculate on the future price movement of an asset, a commodity, a stock, whatever it is at all. Technical analysis helps you to study price action, to be able to evaluate the volume of an asset while looking at the historical data. And with all of those information, you can go ahead to speculate on which direction the market is going next. You see, unlike fundamental analysis, technical analysis doesn't focus only okay sorry I say unlike fundamental analysis, which focuses on the company's earnings, the news, the macro data and all of that. It's all about looking at the sentiment, what the news is saying, and a whole lot of things. But talking about technical analysis, okay, it's all about market psychology. It's all about the patterns on the chart. It's all about price action, and being able to utilize that skill, you can practically make a lot of money for yourself in the market. So while looking at the basics of technical analysis, I made mention of a couple of things the other day in the live session, and I said there are core principles to technical analysis. There are core principles to technical analysis. And number one is that price discounts everything. You see, when it comes to technical analysis, a lot of folks still find it difficult to utilize this skill in whichever financial market they find themselves. And why is this so? It's practically like that because they don't even understand the basics. You see, the basics is the foundation of everything. When you get to understand the basics, it positions you for any other advanced, knowledge you need to get in regards to technical analysis. So, what are the basics of technical analysis? I just mentioned number one, that technical analysis is using the historical price data, trading volume, or price action of an asset to speculate on the future, price of that asset. And there are core principles to technical analysis. And number one, I mentioned that price discounts everything. Now, how does price discount everything in technical analysis? When we say that price discounts everything, it practically means that all known informations like the news, the fundamentals, the sentimental is already reflected in the price of that asset. Let's say, for example, BTC. When you look at the price of BTC on your exchange or your broker, depending on what platform you're trading on, okay, looking at that current price of BTC, just know that all known information has already been discounted before the exchange gives you that particular price of BTC. It simply means that the news, the fundamentals, the sentiment, and all of that has already been reflected in that price. Okay, but nevertheless, most of the time, some high impact news like the Trump tariff war, the war in Iran and Israel, some macroeconomics news, and all of that can actually impact the price of an asset hugely. But all the same, just having to mind that price discounts everything. That's number one. And then number two says that price moves in trends. Price moves in trends. Let's say you're new to TA and getting to understand what TA is and getting to understand the core principles of TA. Number one, I mentioned that the market discounts everything. And number two, I mentioned that price moves in trends. Now, when we talk about trends, you see, trend has been the most common approach while making trading decisions with the scale of technical analysis. Why do I say that? If you're able to understand the trend, it will be very easy for you to make trading decisions. What does it mean? It simply means that in the market, the trend is your friend. You don't have to fight against the trend. When you look at your chart, it's important for you to understand where the market is coming from and where the market is going to. The ability to, differentiate that, put you in the right position to make decisions, and your chances of making the wrong decisions is a bit less because now you practically understand price action in the sense that you know where price is coming from and where it's likely going to. So I hope you all can see my chart. Please, if you can see my chart on the chat box, just let me know you can see my charts. You all can still see my chart, right? Okay, okay. Thank you so much, Henry. So, like I stated earlier, okay, just a recap quickly. I mentioned what technical analysis is. I mentioned the core technical analysis. And I also mentioned that the number one core principle is that price discounts everything, and number two is that the market moves in trends. And I say that as a trader, whether a beginner or an advanced trader, if you're able to understand price action in the aspect of where price is coming from and where price is going to, it will be very easy for you to make trading decisions. Trust me, with a simple knowledge of trend lines, you can make a whole lot of money for yourself. Now, I made mention of something and I said the trend is your friend. Okay. Now on the market we'll have two basic trends. So it's practically called the basic market structure. Why is it called the basic market structure? It's called the basic market structure because whenever something is going up, it forms a structure. Whenever something is going down, it forms a structure. The movement it makes while proceeding in that direction is called a structure. Same in technical analysis. The movement price makes forms a structure, and that structure represents something. So we have the bullish structure, we have the bullish structure, and the bearish structure. So the bullish structure can be regarded as an uptrend, while the bearish structure can be regarded as a downtrend. Okay, so how is the formation of an uptrend? Okay, remember I said the trend is your friend. You don't fight against the trend. Okay, and your ability to understand the behavior of trends puts you in to understand the worst ones that might wreck your portfolio. So, like I said, the basic market structure states that there are two trends in the markets: the bullish trend, which is the uptrend, and the bearish trend, which is the downtrend. Now, what's the difference between these two trends? We all know that in the market there are two participants, the buyers and the sellers. So, are winning the market, you tend to see price move in a bullish movement, which is an uptrend. And when they are losing the market, you tend to see the market move in the opposite direction, which is the downtrend, which is bearish. That's when the sellers are actually winning the market. So the structure of the bullish trend forms like this: the low, the higher higher low, higher high, and higher low. Okay, so this is practically how the bullish trend forms. Okay, this is how the bullish trend forms, and you can go ahead to label it. This is your low. Okay, having here is a low, this becomes your higher high, and then this becomes your higher low. This is your higher low. So you just have to keep labeling it like that. Higher high. Okay, and then this is your higher. So you just have to keep labeling it, like I said earlier, to catch all the structure on that bullish movement. So, like I said earlier, in a bullish movement, it's clearly an indication that buyers are winning the market. Remember, I said there are two participants, the buyers and the sellers. So, when the buyers are winning the market, you're likely to see the market give you this kind of structure, which is higher highs and higher lows. Now, what's a higher high and what's a so when we talk about the higher highs, okay, the higher highs are more like, let's say, key levels which the market has to take out to validate the bullish movement. In the sense that whenever the market takes out a higher high break of structure, whenever the market takes out a higher high, it breaks of structure. So that break of structure is the buyers are still very, very active to push price higher. Okay. So this is where the break of structure occurs. You can see that's where we say a break of structure as occurred. You can see here break of structure. You can see here a break of structure. Okay, this is clearly an indication that the buyers are still very active and are ready to push prices higher. But one rule now states that the higher lows are the protected levels. These areas are the protected levels. These areas are protected levels. Why are they protected levels? They're protected levels because if you watch this body structure, you can see this trend line. Okay, so this trend line is more like what we call a support trend line, the previous higher high. Okay? Because this is what market does: low, higher higher low, higher high, higher low, higher high, higher low, higher high, and then higher low. So this higher low is like a protected level. The market is not expected to take out a higher low. So these areas are protected levels. These areas are protected levels. These areas are protected levels. So you can see something clearly here that during the pullback, after price takes out a higher high, okay, price tends to respect the level of the higher, but doesn't come to take it out. So whenever price takes out a higher low, which is a protected level, is an indication that the sellers are in to ride price all the way down. So how does that occur? It occurs like this. It occurs like this. You see higher low, you see it gives you a retest, and after a retest, you see price fall all the way down. Now, why is this so? It's because the structure of the bullish movement has been violated, which states that the higher low is not expected to be taken out. So immediately the higher low is taken out, we'll say there is a market structure shift, which is called an MMS. So MMS is more like what we call a market structure shift. So it simply means that the market has shifted from a bullish movement to a bearish movement. Now let's look at the structure for sales. So for sales, you see something like this: the high, the low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So this is how the bearish structure forms. Okay, this is how the bearish structure forms. And on the bearish structure, this is your this is your high, this is your high. So this becomes your lower low, this becomes your lower high, this lower low, this becomes lower high. So you can keep leveling it all the way down. And on the bearish movement, which is the downtrend, the market breaks structure to the downside. Now spot the difference. The market breaks structure to the upside to validate the bullish momentum, while the market breaks structure to the downside to validate the bearish momentum. So whenever price takes out a higher low, whenever price takes out a lower low, it's an indication that the sellers are still aggressive. So in this structure, okay, we said that the lower high is more like the protected level, while the lower low is the key level which price has to take out. And whenever price comes up like this to take out the lower high, okay, it's an indication that there is a market structure shift. There's a market structure shift. Then after that, what do you see? You see a retest, and then price goes all the way up. I hope you all are following. If you're actually following, and if you have any question, please let me know, guys. I just want to be sure you're following with what I'm saying. If you have a question, kindly drop it on the chat box to let me know, or you can use your mic. Yes, I'd like to hear from you all. Following, let me know before I proceed. Henry, are you there? If you can hear me, let me know if you're following with my explanation in regards to price moving trends. Okay, okay, yeah, I know. You can use the chat box to let me know if you practically follow up with what I'm saying about these two trends. Okay, great. And the two movements of price that's to trend. We've seen the uptrend and we've seen the downtrend. So let's go to the chart to see a practical example of these trends and how one can utilize them in making trading decisions. Now, look at this chart right here. Okay, this is a trade that I shared I think few days ago in the group. So looking at this trade, okay, what structure do you see? You can see that the market was giving us. low here, higher low, sorry, higher high, higher low, higher high, higher low, higher high, and then the market broke structure to the downside. Okay. Now, when the market broke structure to the downside, what did you see? First of all, the market took out two higher lows. Okay, this is not too significant, but it's still a higher low. Delete the position too. I'll bring that back later. Okay, so now what can you see? Remember how I drew the structure? Okay, the market was actually in an uptrend. Let me do that again. The market was in an uptrend. Okay, how did that uptrend form? With what I explained earlier, these are low, these are higher high, higher low, higher high, higher low, higher high, and then you see what happened? The market fell from that support trend line, taking out a protected level, which is this higher low. So there's a market structure shift here. Okay, market structure shift occurred here. There's a break of structure to the downside. And remember, the break of structure to the downside is what validates the fact that sellers are practically in to take advantage of the market. That is the right price to the downside. So how did I take that trade? Waited for a retest. Okay, I waited for if the buyers can still come back to take out this high. No, this is the higher high, which price has to take out. Okay, because what this trend was expected to do was give us this low here, take out this high, and then continue. But unfailingly, market was unable to take out this high. Market was unable to take out this high. So since the market failed to take out this high, okay, now I can see the bearish structure already, which is price book structure to the downside, giving us a market structure shift. That was almost a 5x trade. I think it's a 5x trade because my position to my stop loss was a bit smaller. So that's how I was able to catch this trade. Okay. So now let's look at another example. Let's look at another example. Now here is another example of a trade I've taken before. You can see these are higher high, higher low, higher high, higher low, higher high, higher low, and then a high. So what happened here? There was a breakout. Okay. So when the breakout occurred, it was an indication for me that, oh no, the sellers are in for the market. Okay. The sellers are in for the market. And in trade saw that the sellers were very, very aggressive. So I took a trade from there. But as a beginner, it's mostly important for you to wait for your retest. Okay. It's mostly important for you to wait for your retest. Now, notice finally came back to retest and then gave us the sell. So if you actually took a trade from here, where let's say you were waiting for your retest, okay, before you take a trade, you see that you also got a trade, okay, having your targets just at this point here. You can see that you also got a trade with your stop loss slightly above here. You got at least a 2x trade. So when you talk about market structure shifts, it's always important for you to wait for a retest. Waiting for a retest is very important. It's more like a confirmation that, okay, since the buyers are unable to take out this high, since they're unable to take out this high here, this is the high. Okay, since they were unable to take out this high, now notice something. When price broke out from this support trend line, violation of an uptrend, the market came back, but it couldn't close above this high. So since it couldn't close above this high, we saw the sellers take charge of the market. So that is it about understanding trends when it comes to technical analysis. That is it about understanding trends when it comes to technical analysis. So what else do we look at? Now I've mentioned that the market discounts everything. Another one is that price moves in trend, and another one is that history tends to repeat itself in technical analysis or in trading. Now, here is a clear example of how history repeats itself. Now, you see, I took this trade here before, okay? I took this trade here before, and it gave me a 5x, okay? Or 4.6x, sorry. This particular trade here, let me highlight what odds are doing and the current, data and informations that are affecting the market. I know some portfolios are done with odds, but all the same, we all are anticipating for the odd season and for BTC to keep giving us that bullish long-term move and all of that. But all the same, you can take advantage of the futures market to make some money for yourself. That's why it's very important for you to take up our futures trading course, because on our futures trading course, we started from basics of what the futures market is about. Because despite your skill in technical analysis, you still need to understand how any market you're going to utilize that skill works, whether futures, forex, indices, whatever market it is. Despite your TA skills, it's important for you to understand how that market works. So we start from the point of breaking down what futures trading is, getting along with leverage, different approach to futures trading and liquidity. We'll talk about funding rates. We'll talk about risk management. We'll talk about your psychology. We'll talk about a whole lot of things that comes along with futures trading. Then we'll go over to the point of breaking down the technical analysis approach towards futures trading. Because you see, one thing I've understood with technical analysis is that you might have a strategy that works on this particular market or on this particular pair, but it doesn't work on another pair or on another market. So we're going to groom you with a tier scale which you can implement in any market at all, whether futures or forex or whatever market authority can utilize our TS skills in all of these markets. Not only that, you get access to our Discord platform where you can engage when you get different updates, and also you have access to a newsletter where you get breakdown of all performance and the general market view, BTC breakdowns, and all of that. Like, there are a whole lot of package for you to take advantage of in our futures trading course, and that is why you shouldn't miss out. Not only that, you also get access to a one-on-one mentorship with me, where I'll be guiding you up there in your DM to monitor your progress. You can ask me questions at any time. We'll have live sessions with you, build a strategy that works for you, and just bring you up to become profitable, not just short-term profitable, long-term profitable, and also having that mindset and courage to take trades confidently without being scared or anything. Okay, trust me, it's something you wouldn't want to miss out, and the price is quite beautiful. I can bet that you wouldn't get that price in any academy giving you that whole discount with futures trading course and all of these things I've mentioned. Not just that, there are still a lot more. So it's something you wouldn't want to miss out on. So I think you do yourself more good by taking up our futures trading course. Okay, start your journey and embrace the world of financial breakthrough. Looking at our futures course, you're going to see how much I talked about how futures changed my life. Okay, I used to be a struggling trader, like struggling investor and all of that, but now futures trading, I make money and I invest in BTC. This is something you're gonna develop. I'll walk you through all of that. So I've said a lot already. So go ahead, check out our platform, look at everything we have on there, and sign up. We have a discount already, and it's something you wouldn't want to miss out on. So I was saying something earlier that history repeats itself. History repeats itself in technical analysis. Now, what do you notice in these two highlights? Okay, you can see that this is more like the past. Okay, this is more like the past history. Okay, let's just call this the present. Okay, so you can see that these two approach are likely the same. So history tends to repeat itself. History tends to repeat itself. Currently on BTC talk and all of that. So I think I've said a lot already. I made mention that technical analysis is about using the historical price action of an asset with the chart patterns, the volume, the indicators, and all of that to speculate on the future price of that asset. And not only that, I also made mention that unlike fundamental analysis that deals with sentiment, news, macroeconomic data, and all of that, TA is more like psychology, market patterns, and all of that. But I always advise that you don't just stick your TA alone. Fundamentals also helps you in some aspect by knowing upcoming high impact news and some economic activities or events that might actually affect the market. So you have to put both together, but take your TA seriously and use the fundamentals to complement your approach and all of that. And I talked about the core principles of technical analysis. I made mention that, price discounts everything, which I detailed down. I also made mention that the market moves in trend, price moves in trends, which is where I showed about the uptrend, the downtrend, and how this trend changes. Okay, because when you follow a trend, knowing that the trend is a trend, it's also important to know when the trend changes. Having said that, I also made mention that history tends to repeat itself in technical analysis. Let me show you more charts on where history repeated itself with this approach so you can literally understand what I mean by saying that history repeats. This is another trend. What can you notice here? You can tell this high. So since price failed to take out this high, you can see the market broke out. After that breakout, you can see the retest and then boom, you can see that sell there. Okay. So if actually you wanted to take a trade, you can see that this is the high which price is expected to take out. If price did something like this, this breakout might not have occurred. So this high becomes a significant level or a key level which the market has to take out. Okay. Regarding to our illustration earlier, since price failed after giving out this low price failed to take out this high, okay, you can see how the sale came in. And where did that retest to call? Let's see where that retest to call. The retest likely occurred on this other block here. So your target around here, for example, you had your target around here. You had your target around here. Your entry was around here, and you have your target around here. Okay. Well, then where do you put your stop loss? Just your stop loss just a little bit above this high, and then your target should be down here. Now this is 4.9x trade. This is another history in the past that occurred. Okay, so can you see how history can repeat in itself? So that is to show you how wonderful TA scale is. Okay, but looking at it to you, it is like it's simple and I can do this. You need a whole lot of things to actually validate, this whole illustrations here. But honestly, I'm practically walking you through the basics. What I mean by, the basics of technical analysis and how you can utilize the skill to make a lot of money. History here, this is past history. This is past history. So you can see this is history here. This is history. This is history. Let's just call this the present. So you can see how history has been repeating itself on the charts. You can see how history has been repeating itself. So to conclude this whole thing, I've said a lot already. So we also say that there are some fundamental concepts to technical analysis, which is the trend. I made mention of the uptrend, the downtrend, and we'll have the sideways, we'll have support and resistance, we'll have the volume and a whole lot of them, but we won't be talking about that today. I just wanted to brief you on the basis of technical analysis and also have it in mind that regardless of how wonderful you think your strategy looks, it's important for you to also, apply management and look out for other indicators and approaches that might affect the markets to better make an enhanced decision which you're trading. So hope you all learned a lot with this live stream. To answer questions before wrapping up the live stream. Go ahead to ask your questions. I'm open for it. Any question? Any question? I'm open to your questions. If you have any question in regards to what I've said earlier, your question, feel free to ask your question. I'm open for it. You can use the chat box, please. Use the chat box. Let me know if you have any question. Okay, okay. So I guess there's no question so far. Okay, okay. Henry said, okay, okay. Sorry. My boss, Mr. Russell. Where do you see Bitcoin price going in the next 2 weeks? Okay, that's a very interesting question. That's a very interesting question. Lately, I would say that BTC has done so wonderful with its price action. Okay, we have seen price, give us that bullish momentum all the way from 74K, and a lot of traders, a lot of investors have been very bullish for a while now. But I think a lot is happening in the market right now, and I think that question was very, very valid. So I'm going to break it down for you to understand where I see BTC going in the next 2 weeks. Now, let's look at. I'll start from the weekly charts. Okay. Okay. Looking at the 1 month charts. Okay, we can see that BTC is super bullish. Okay, there is no much to be done here. It is just a clear picture that the monthly chart looks very, very bullish. Okay, so looking at the 1 week chart, this is where I start my breakdown on BTC. So on the 1 week chart, we can see that the low, sorry, looking at the 1 week chart, we can see that BTC broke above this high, which is the 74K, a break of structure above 74K. That's what validated. That was validated this pump, this break of structure here. So after this break of structure occurred, okay, you can see that the market gave us a pullback. After the break of structure, the pullback occurred, and then using even the knowledge of the trend which I talked about, okay, what we all are anticipating for is a break of structure above this high, okay, on the weekly time frame. Okay, we already see price reacting from this fair value gap as a reversal point to take price all the way up. Okay, from this FVG, there was a reversal to take price all the way up. And what you know, traders are anticipating for is for a full body candle close above 110,000 on BTC. Because if you look at the structure right here, if you look at the structure, let me just start from here. If you look at the structure right here, okay, what can you notice? Let's just call this the low, higher high, higher low, higher high, higher low. And then what are we anticipating for? We're anticipating for the market to give us a break above 110 because when that break occurs, we'll see price come down here like this and then continue all the way up. Okay, so right now 110K on BTC. The ability of price to break above 110K is a good indication that the bullish momentum would likely continue. But you can see that there are multiple buy rejections at that level. There are multiple buy rejections at this level. So because of this buy rejection, okay, it's an indication that there is not enough volume from the buyers. There is not enough liquidity at the moment to have that candle close above this 110K on BTC. So having seen that on the 1 week time frame, let's take a look at the 4 hours time frame. Sorry, the 1 day time frame. So let's look at the 1 day time frame. So on the 1 day time frame, okay, let's look at where price has been coming from historically. Okay, now you can see that movement here that the market was in a bearish move. Okay, so it's just like what I talked about using the trend line. You can see the market giving us this. Sorry, you can see the market giving us this. Sorry, you can see the market giving us this, lower highs, lower low, and then a breakout occurred, a retest, and boom, prices all the way up. So on the daily, we can see that the market already shifted. Okay, there was a shift here. There was a shift here, a market structure shift here on the daily time frame. So overall, we are bullish. So using our trend line here, we can see that BTC is bullish. Using our trend line, we can see that BTC is bullish. Okay, but now what do you notice? What do you notice on the trend line? Now look at this. Look at this. It's very interesting chart. You can see this is our low, a high. I'll use it as a high, a low, a high, a low, a high, and then a breakout occurs. Okay. Now, since the breakout occurs, you can see the buyers are back to reclaim price. So this is why 110k is a very significant level for BTC right now to decide the fate of buyers. This is 110k, which is that same high we saw on weekly time frame. So on the daily, there's already a breakout. Okay, but there's possibility that buyers can still reclaim price, and that is breaking above this high. Why is breaking above that high very important? It's important because if you see here, you can see a break of structure. And what does a break of structure indicate? It indicates that buyers are gaining momentum to push price all the way up. Okay, it's an indication that buyers are trying to push price all the way up. Now, let's draw a trend line again. It's a very small trend line, but very significant one. You can see that bearish move here. Okay, you can see the bearish move, right? Now, let me show you what price did there. This is high, lower low, the breakout occurs. So the retest happens, and then what do we expect? A break above this high. So once a break above 110k occurs, you see something like this, and BTC goes all the way up. So in the next 2 weeks, okay, what are the things I'm gonna be paying attention to see what the outcome of the price of BTC would be. So I think in the next 2 weeks, what we're having here is more like a consolidation. Okay, it's very little, but if you go to the 4 hours time frame, you can see that this is consolidation happening around here. It's very little but significant. So BTC is practically consolidating. Okay, so we call it. We expect a breakout. So whichever direction the market breaks out, that's where we see a continuation. Okay, so if it breaks out down, you see something like this, and then the market continues going down. Okay, so I think BTC might keep ranging inside this zone for a while. BTC might keep ranging here. There is enough volume. I want to see a breakout above 110k, a retest, and then price goes all the way up. I don't know if that answers the chat box to let me know if you're clarified. I don't know if I answered your question, boss. Let me know if you're clarified with that. My boss, Mr. Rail, are you clarified, sir? Let me know in regards to my breakdown on where I see BTC price, going in the next 2 weeks. Okay, okay, thank you, sir. I'm glad I was able to break that down to your understanding. So, in conclusion, I think BTC is in the consolidation phase. We're practically, consolidating, and I can also call this accumulation. I can call this accumulation. So be careful. Whenever accumulation happens, okay, it causes an impulsive move. So the impulsive move can either be to the upside, okay, or to the downside. So if it's to the upside, I want to see a full body candle close above 110k on BTC, and then we're likely to see 115, 120, and all of that. But if it breaks below, if it breaks below this range, which is around, if it breaks below 102k to 100k, I think on this range, I see an order block, okay, and there's liquidity here. There's a liquidity build up here. Okay. So with this liquidity build up and this other block here, okay, now BTC is likely to do something. Let me show you. If this accumulation continues, okay, and if there's a break to the downside, okay, this zone, which is the 102 to 100k psychological level for BTC, which is the major support level, we might still see price go all the way up, do something like this, and then boom, we're back up. Okay, because this 100K level has been protected for more of 100K for months, and I see a very nice price action here. And what validates this price action? There's a break of structure here. Because of this break of structure, this is what I see. Price gave us a low. Sorry, let me interpret better. If in any case, price, after giving us this structure, came here consolidating, and all of that, I expect price to tap into this order block in case there is a pullback, and then give us some kind of retracement, and then price goes all the way up. This is what I expect if price does not break up 410K at the moment. But at the moment right now, okay, we are still ranging market or sideways trend. Okay, so having said that, Faith, you asked the question and you said um, you want to understand if there's a specific time frame for order block. Okay, now the thing is, order block is more of like an advanced course. Okay, I'm breaking it down in this class. It's gonna be a little bit complicated for you as either a beginner or an advanced trader. I don't know your level of trading already, but what I would say about order block is that order block are zones where there are a lot of orders to be delivered. Okay, whether buy orders or sell orders. To clarify you, I basically don't use any specific time frame for order blocks. Sometimes when I get my confirmations, I can go to the 1 minute chart, the 5 minutes chart, the 1 hour chart, 15 minutes to take my trade. And if I don't see my order block, there are still other POIs that I use in taking my trade. But to better answer your question, I don't have a specific time frame for my order block. The only thing I do is I use different time frames to see how much mitigation has occurred on that order block. So if it's already mitigated the 50% of that order block, it simply means that the chances of that order block holding is lesser. Okay, but the funny thing is that order block most times are confusing for beginners and most advanced traders because you might see an order block of 1 hour time frame, it has been mitigated, and you come to 15 minutes time frame, it's not mitigated. Now you're confused. Okay, how do I take this trade? Are you sure I'm not going to hit stop loss, stuff like that? So I think over time I will go to that topic of breaking down order blocks and how to spot a valid order block, how to use it, and how to implement it in different time frames. So having said that, guys, we've come to the conclusion of today's live stream. I hope it was quite insightful, talking about the basics of technical analysis. A quick recap: I made mention that technical analysis is using the historical price action, the data, the volume of an asset to speculate on the future price action of that asset. In the sense that you look at what happened in the past with price, which involves the activities of buyers and sellers, the volume, the chart patterns, and everything that's been shown on the technical aspect of it to speculate on the future price of that particular asset, security, commodity, whatever you call it. And then I went down to also make mention that we have the fundamental analysis. We talked more about news, macroeconomics data, sentiment, and all of that. It's also important for you to pay attention to read news times to see if there are high impact news that might affect your TA setup and all of that. And I talked about the core principles of technical analysis. One, I said that the market discounts everything. Okay, the news, the sentiment, all of those information that you see are already discounted in the price before you see that original price on your exchange. And I also made mention that the market knows trend, price knows trends, and the trend is your friend. Don't fight the trend. I already gave examples of that on the chart. You can watch the recorded version to get a clear picture of what I was talking about earlier. And I also made mention that history repeats itself. History repeats itself. So a quick one to wrap up the live stream. Now on the BTC BTC on the, let's see, on the 4 hours time frame. Let me show you how I'm practically looking out for a trade. I'm going to show you how I'm practically looking out for a trade on BTC's 4 hours time frame. Just give me a couple of minutes to display my chart properly. I just want to share a trade idea. So if you know what you're doing with technicals, you can utilize this, wait for higher time frame confirmations, and you might be open to take a trade. You might be open to take a trade. Hold on while I set up my chat. Okay, on the function, okay, I talked about accumulation. Said BTC has been accumulating for a while. The 4 hours doesn't look pretty well, so I'll use the 1 hour time frame. So now, if you want to take a trading decision here, okay, this is how I'll do it. I already have a setup on that, which was practically on when I started the live stream. There's a break of structure here. We all know that BTC is bullish long term, and you can see the consolidation is even very visible on the 1 hour time frame. That's the consolidation there on the sideways trend. Because of this break of structure, is an indication that this zone is clearly protected. Okay, this zone is protected because of this break of structure. Because this was the other block, this was the other block that initiated this break of structure. Like this, you can see it low. Then in for the markets, you see price came back to that other block, and then more like a retest, tiny but evidence. You can see that break of structure above here. So we just call this an MMS. It's tiny. Okay, so if I want to take a trade now, I already have an open trade. This has not been fully mitigated. This other block has not been fully mitigated. So I can use this other block, okay, to take my trade. So here I see my liquidity. So this is what I expect. I expect BTC to take this liquidity, tap into this other block, and then my target should be this high. Okay, my first target should be this high, and then my final target should be this high. So this is how you do it. From here, you might want to take a trade. I want to take a trade from here. Now, this is no financial advice. Okay, guys, feel free to make more research to validate this setup. And remember, risk management is key. Risk management is key. This is my target for the trade. Now, if you go down to 30 minutes time frame, you might see a clearer picture of this. You can see, you can see that tiny other block sitting right there. So this is my other block. This is my liquidity here, my internal range liquidity. And then what am I anticipating here? I'm anticipating price to, take this liquidity back into this other block and give me a buy. This is what I expect on BTC. But remember, it's a dangerous zone to trade from because of this accumulation. It's dangerous, okay? It's very, very dangerous. So manage your risk. If you're not confident with the setup, feel free to ignore. If you're going to take it, manage your risk, or you can go ahead to make more of the setup. Okay, so thanks, guys. Thanks, guys. I really appreciate you for staying with me on the live stream. So, if you want to check out the setup, go to your 30 minutes time frame, or you can watch the recorded version to check out the setup. So, trade is 104,267.3. That's my entry price. My stop loss is 103,147.3. And then my target is 108,955.9 for this trade. Remember, it's not financial advice. Manage your risk if you take the trade, and then make more research and all of that. So that is it, guys. Thanks for having you on the nice live stream. See you again tomorrow. We'll go live again on YouTube tomorrow, same time, 1 p.m. Lagos time and 8 a.m. New York time. Thanks for sticking with me on the live stream. See you all tomorrow. Thanks, guys.